All right. Good morning, good afternoon, good evening, wherever you are. Um, it's the 30th of July. We've got about 25 minutes to NY session open. All right. Just give me a second. Just let me know if the sound is good. I don't know what's wrong with my video today. Perfect. Thanks, Philip. Thank you. All right. Let's go to the calendar. So today we have the interest rate decision, and 30 minutes after that is the FOMC press conference. That's a big event, right? That's a big event for the month. It's as important as CPI or NFP, right? And those are two individual events. They're not one. The interest rate decision is the first. Yeah, I had a sneeze coming. The interest rate decision is the first event. 30 minutes after that is the press conference. The two events. Okay, and then we have NFP CPI obviously for the month, right? So NFP is this week as well. That's on Friday. So we should expect volume, all right? Starting today, we should expect volume. Now, usually uh, about a day and a half, sometimes even yeah, about a day and a half at the most, right? So that's about 30 hours, 30 to 35 hours um, into this event. I mean, before the event, um, the price starts to range, right? And if you go back on the chart and if you look at past events, you'll see that the price is ranging. And if you look at the daily time frame, we had a small daily candle, just 260 pip candle, right? Just means no volume. If you look at the previous day, we had a lot more volume, about 400 pips, and then price died, and then volume died yesterday. And if you look at the day before that, which is Friday, right? Am I right? No, this is Monday. This is Wednesday, Tuesday. No, so this is Friday. If you look at the Friday daily candle, that's 487 pips, about 480, 490 pips, and this is about 430. Yeah, so we had volume die down gradually at the beginning of this week, and yesterday we just had a 260 pip candle. Now that is usually kind of rare for gold because over the last few weeks we've seen above 275 or 300 pips per day, right? But then this, as I said, this is because we are heading into news later today. That's the reason. If you look at the 4-hour chart, you'll see that price is ranging. There's nothing happening, right? Just garbage. If you look at the 4-hour candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 11, so that's about 44 hours. So that's why I said 30 to 40 hours. Price has done absolutely nothing. We've just very slowly moved up, um, and we'll have to see if today's move is going to be a push up. To the first move, is it going to be a push up to grab liquidity to continue down, or are we going to grab liquidity from down? Is the first move going to be a move down to grab liquidity to push up, right? When we do the analysis, we will have a clearer picture of what could happen. But looking at the week, let's go up a time frame to the weekly. If you look at the weekly, we're very bearish right now. We're very bearish. Just on the weekly time frame, we've rejected 3430 and 3400, right? Those are weak rejections. And the last time price did that was here, and then before that it was here. And you saw when it did it here, price came all the way down and created support here on the weekly, That's around 3,250, around the 3,250 area. And then it did the second time, price came down and created support here around the 3,230 area, right? So 3,250, 3,230. You got to keep your eye on those levels because price can push down to those levels. We've done it again. Are we going to push down again to those levels, 3,250 or 3,230? And if we are, that's about a 990 pip move, very possible, right? I've seen 990 pip, 1000 plus pip moves, 1200 pip moves in a single day on gold, right? So that's very possible. That can happen today, or it can happen during the rest of the week, right? Over the next 3 days, or over the next 2.5 days. Um, on the daily time frame, we are at a decision level, but price has tapped these levels several times. We've tapped it once here, we've tapped it twice, 3 times. Now, does it have enough liquidity to push price up, or are we going to come back or come down there for the fourth time and go through it? We'll have to wait and see, right? That's on the daily. But on the weekly, we are bearish. On the daily, so far, we are bearish. We have created daily support, but this is a very weak daily candle. It's inside the range of the previous candle. It's like inside bar candle, inside the range of the previous candle. And what's more important to note is that this candle stayed below 3332. It stayed below that previous weekly SR level, right? We didn't close above it. If we closed above it, we could have said, okay, maybe price is very likely heading to 3350 or even higher, but we stayed below 3332 and we stayed inside the range of the previous daily candle, right? So that candle really hasn't much information apart from the fact that we've created daily support at this zone, at this decision level. We've created daily support. That's the only thing going for this candle. Other than that, it's inside this range and it's close below 3332. So there is no real volume showing in that candle that price could push up. Right, there isn't much information for us to know if price is going to push up. I would rather say that because it's a weak bullish candle, it would probably mean that there is more bearish volume, right? There was more bearish volume. That is why, just give me a second. Sorry. There was more bearish volume, and that's probably why price couldn't close above 3332, right? This weekly SR level. So it's like a weak. It looks a weak bullish candle to me. It looks a weak bullish candle. Price could easily break the low and continue down. We could grab liquidity from above. The first move can be a push up to grab liquidity during the interest rate decision, and then during the press conference we could be pushing down, right? We'll have to wait and see. The streams won't be on at that time. I will probably very likely be at the charts I'm going to be trading at that time, but the zones that we draw now will be valid for even then, because I don't think anything is going to happen today, right? In the NY session, we're not going to have any big moves. NYC session, we're not going to have any big moves. We're going to be ranging because we've got we got these two big events happening a few hours from now. Let's go to our trading chart. There's nothing really to look at the trading chart. I mean, there's nothing really. We did take a sell. The sell worked. I'll just explain the sells that we took or during the stream. Everything was very clearly explained. Let me try to find where I took the sells. I can't remember. Sells were taken. Was it taken? Was it here? I think it was here. Yeah. Yeah, this was the sell that was taken. This was the sell that was taken. The reason this sell was taken, what I said, that price had come to the liquidity candle, it had tapped it. We had created the London high. We closed below this old weekly level. I had given this level 3325.04. Old weekly, as in this is last week's. I think the last weekly candle low, or the previous weekly candle low, right? 3325 is the previous weekly candle low. So we closed below that, and I said if we stay below, we are pushing down, and that's exactly what price did. We drew the fib, price came to the sniper level. I got an entry here. There was an entry taken down here as well, I think somewhere here, but majority of my entries were up here, with a stop loss of about 20 pips on that, and then price pushed down all the way to this 2 RR level and the liquidity candle, and that's where I got out, right there, that liquidity candle to the left. This was all explained, so that was about what, a 100 pip push down, yeah, about 100 pips, and with about a 20 pip stop loss, right? It was taken live during the stream. Okay, so let's get rid of this and let's go to work. There is some news, I think, yeah, there is some news at 8:15 8:15 a.m. and then again at 8:30 a.m. 8:15 a.m. there is some news, employment chain news, and then advanced GDP at 8:30 a.m. It's not going to do anything. It's not going to do much. I'm not really. I really don't care about those news. It's the interest rate decision and the FOMC meeting minutes later this evening is what I'm going to be looking for. All right. So it's going to be very hard to draw zones today because it's just ugly. There aren't really leg out candles. We're just ranging. It's super ugly. We'll have to try. We'll try our best. Let's get rid of all of this. It makes it easy once we have a cleaner space. Yeah, let's get rid of all of that. Let's get rid of this. Yeah, I'm going to redraw all of this, right? I'm just cleaning the chart so that you guys can learn in a market like this. This doesn't happen often on gold, but when price has been ranging for 44 hours, and when you have candles like this, we're going to draw these supply demand zones together, so you can see if you ever have to trade in a market like this, how you would draw supply demand zones. Okay. All right. Now we have a drop, clean drop, and a rally here. There is some sort of base there, right? We cannot ignore it. When there is a drop and a rally, there is demand there, right? I always say if it looks like demand, then there is demand there. So there is a drop and a rally. There has to be demand there. We're going to start with that. Okay, let's take a look at the 1 hour time frame and see if we can find a base there. This is kind of okay. It's kind of okay. That's a drop, a base, and a rally. Let's go to the 30-minute time frame. Yeah, that's okay, right? So that's a drop, a base, and a rally. I did this yesterday. I'm just redoing it again, right? For those who are here for the first time, I'm just redoing it. The 308 and the low would be, take this low, 183. Okay, so that's the H1 demand zone. Okay, right. Next, here we have um, there is a leg out there. So whenever it is difficult to identify a base, because the base is in structure when you're trying to identify supply demand zones, a rally based rally or a drop based drop or a rally based drop or a drop based rally, you're trying to identify these four. The base is the most difficult one. It can be confusing if there is a lot of range, and if the candles are very four candles are very small compared to this one. This is very easy: a drop, a base, and a drop, right? So you can easily see the base in candle. But if you compare that to this is confusing. So always start with looking for the leg out, right? So the largest candle moving out of the zone. So this candle would be the largest candle moving out of the zone, and if you look left of that, then this is the base. You have 1, 2, 3 candles base, and this would be the leg in, right? So now we can draw it. Now it's more clear, right? Now it's more clear. We have a rally. This is the leg out, and then the ones next to that are the base. Those three are the base, and this. Now, um, you could also consider these two in that base and say this is the leg in, and then these five candles are the base, and that's the leg out. That's fine too. There's nothing wrong with that, right? There's nothing wrong with that, and that's probably what I'll do. Let's see. Let's try to look at this on the. Let's have a look at on the 1 hour time frame. Maybe we just have. So it's a mess. 1 hour is even worse. 30 minutes. Yeah, it's just. Yeah, it's better to stay on the 4. It's just really ugly. Mm. Yeah, I'm gonna. This as the leg in, these three as the base in candles, and this one as the leg out. Rally, base, rally. Okay, so that's the bottom of the. That's 899. Open 461. 461,899. And we'll mark that for our demand. And here too, there is a rally, a base, and a rally. And it's I'm not going to mark that because these two zones are they're touching each other anyway, right? They're almost just a couple of pips apart. So yeah, just 5 pips. It doesn't matter. We don't need to draw that. Okay, so we've got a demand, and then we have another zone here, a rally, 3 base in candles, and a rally here, right? So we're gonna mark that as well. Okay, that's a little easier. Rally, this is a leg out. If you see from these 4 candles, this is the largest candle. That's the move out of the zone, and those 3 candles create the zone, and that's a leg in, base, leg out, right? So the open is 828 and low 183. 828 183. Now we're going to move this down so we don't overlap this. This low 183. Perfect. Okay, and this 2 is for our demand. Okay, so that's how you mark, that's how you draw zones in a range in market. When it's been ranging for 44 hours and candles look like this is how you go through them, right? If you can't, they might be not very visible on the 1 hour, the 30 minutes, because too much of noise on those time frames because of prices been ranging. So it's better to look at it on the 4 hour time frame. And then, as I said, like pointers where you look out for the leg out first, and then try to find the base, right? You work backwards. Okay, right. Let's look at supply. Supply, there isn't any supply. In fact, there's no supply here. There is supply. Supply is up here. There aren't any. Yeah, this is already closed above. So there is no supply here. Let's take a look at the 1 hour time frame. Maybe there's supply on the 1 hour. Um, yeah, there is supply here. We're going to bring this down here. Going to bring this down here. On the 1 hour, it's a drop, a base, and a drop, right? This base is the base before this 3332 level, right? So whenever price crosses a psychological round number like this, like 3350 or 3300, or a weekly SR level, we always have to look at the lower time frame. Before I do that, yeah, I'm going to divide that into two zones. Okay, better. Let's take a look at that on the 30-minute now. Yeah, that's good. On the 30-minute, we have this. Is price closed above it? Yeah, we have. We don't need that. We've, we're trading above it. We don't need that. We're at the weekly SR level. So this is the next zone. 30 minutes. These are all the basin candles. So that's a drop, basin candles, and a drop, right? And it's visible on the 1 hour as well. Drop, 4 basin candles, and a drop. 495, and this high is 081. 081. Okay. 1 hour supply, 4 hour supply, and there's gonna be some, I think there'll be some interesting moves today. Interesting moves today. Price is just compressing up, right? This very much looks like price compressing up for a big push down. At least that's what it looks like. This is just compression. Price just pushing up and then a big break and a retest and a continuation. It's very likely there'll be a big move today. Okay. We'll extend these right as well. This is for later on, and when I say later on, I mean the interest rate decision that is 6 hours from now. 6 hours. It's towards the end of the New York session. Towards the end, not at the end, but towards the end. Okay, cover about 450 pips to the upside. I think we should increase. We should bring this, move this as well. Okay, it covers about 650 pips to the upside. I think that's good enough, right? Now, and let's see the downside. Yeah, we've got to move these along to the right. Yeah, this is the NY open. Yeah, that's good enough. 800 pips to the downside. That's good enough. Let's just move all these labels to the right. Now, I say this almost every day, and I'm going to say it again today as well. Um, when you have liquidity candles stacked one on top of the other in a high volume session, right, or a high impact news event, if price goes through one, it's very likely to go through the other, right? Because when you have levels stacked up one against the other, all that it means is when they were formed, price broke out of them, tapped into them, and then pushed up, right? And that's exactly what you're seeing here. Right? If you look here, price created it, went up, tapped into it, pushed up, came, tapped into it, pushed up, came, created it, tapped into it, pushed up, right? So if there is a high volume event or during high volume time, like within the New York session, price can, if it goes through one, it could go through the second and the third and come to the next one, to the third or the fourth one, right? The same applies when price is pushing up as well, right? If you have levels that are stacked up one against the other in high volume time, if price starts to push through one, it can push through the other and probably go to the third or the fourth one. Okay, let's take a look at these new zones that we have. And let's see if these zones are high liquidity zones or not, right? That is the next step in the process where we see if these are high liquidity zones or not, okay? I'm not expecting a trade today, at least not in the first 2 hours of the NY session. I'm not expecting anything to happen. We're going to just be ranging. So we'll probably have a shorter session. This is more of a educational session. You can consider this educational session, but learn how to draw the zones and learn why these zones, the way I draw them, why they're important. Because then you can do it by yourself. You don't need these streams. Okay. Um, let's look at supply first, right? Has this supply zone taken out an opposing demand zone? Yes, it has. We spoke about this. Whenever there is a gap like this, that's an invisible candle coming down, right? Price kept 155 pips from this candle to here, 155 pips. That's an invisible bear candle coming down. So you have a bear candle there. You can't see it. Your broker doesn't show it. Some brokers will, some brokers won't. IC Markets doesn't. But some brokers, what they do is they'll fill this price with a bear candle, right? Um, so there is no candle here, but that's a bear candle, and then the market opened here and pushed up. So that's a drop and a rally. Therefore, there is a base there, and this move down took out that low. So that's a high liquidity zone. Okay. Next, this demand zone here, has it taken out anything to the left? Uh, kind of. Yes, kind of. Really doesn't matter because this is all just compression. I don't think anything's going to happen now, but there is a sort of a rally here and a drop here. Let's look at the 30-minute time frame. Yeah, so there is a rally, a base here, and then a drop. And this move up has taken out this high, this high. So that is a high liquidity zone, right? Okay. The one below, has it taken out? Yes, there is a rally, a base, and a drop, and this move up has taken out this high, right? So this too is a high liquidity zone. And then the one below, has it taken out anything to the left? Maybe not, I don't know. Let's see. Not really. It's not taken out anything. There is a rally. No, there is this. No, it's not a. If price had tapped here, then maybe you could have considered this as a rally base drop. This one tapped here and pushed up and took out that high. Yeah, yeah, yeah. There's a drop base drop, drop base drop here, supply, and price tapped this and took out that high there. So this one here is a high liquidity zone. If you remember, there was a 4-hour zone here that we didn't draw, and that high liquidity zone is actually of that zone, but they're too close to each other, so we'll put it here. They're just 5 pips. There's only a 5 pip difference there. So we're going to put it here. But that supply zone that we didn't draw, I'll show you on the 4-hour. This rally base rally is the one that took out this supply here, this push up. Or if you look on the 1-hour, the drop base drop was taken out by this move out, and that's out of that 4-hour zone, right? Doesn't matter. There's just only like a 5 pip difference there. Okay, those are the zones. Those are the zones for today, and then until for the interest rate decision, right? These are the zones. We've done them. We've taken about 30 minutes to do them. Now, next thing, let's try to identify a high liquidity candle in each of these, if there is one at all, right? Let's start here. Let's start with supply, because we're just under it right now. I'm looking for the largest bear candle, okay? Either in the zone or to the left of the zone. In the zone, inside here, or to the left of it. All right, so if you look left of it, we've got this big candle here. Let's start there. Let's look a little further left of it as well. Now there's a lot of supply there, a lot of sell liquidity. Not supply, a lot of sell liquidity candles there. A lot of it, a lot of it. Saw this yesterday as well. It's a key area. We will mark the previous weekly low as well later on. All right, so this is the candle that we identified. Let's take a look at that candle on the 30-minute time frame. It's 111.98. I think that's it. Yeah, this candle here, this is a humongous candle. 413 pip 30-minute candle. 16, that is PPI, right? That's the candle they've been gonna later on before the stream ends. I'm going to mark that price point, or if you want, you can mark it right now. This price point, the low of this candle. The low of this candle is 3336.06. 3336.06. Mark that low. That's a significant drop, and there's a lot of selling pressure in that candle, right? And let's, in fact, take a look at it now. Yeah, you see how price is staying below that? And you see how this supply zone is aligning perfectly with it? That's a very important level, 36, 36, 33, 36.06. Okay, and we cover that. Yeah, it's inside that liquidity candle. Perfect. Let's go to the 15-minute time frame. There's nothing on the 15. We'll just keep it to the 30-minute, which is this candle right here. So this high is 488, low is 386. 488, 386. Let's get rid of this for now. Okay, so high 488, 386. Let's move this up. Yeah. Okay. Now you can see how price tapped that candle once and dropped. We barely tapped it, and we dropped 145 pips. We tapped it again here, London session, and we dropped 98 pips. And we're trying to stay under that level that we drew, right? I'm going to redraw that later on before the stream ends. And then if you are trading 5.5 hours from now, 6 hours from now, the interest rate decision or the FOMC meeting minutes, then you're going to watch that. You should watch that area. Pay close attention to what price does at that level. Okay, let's take a look at demand. On the 1 hour time frame, this is the largest candle is right here. This one right here covers both zones. 175 pip candle. That's a good place to start. On the 30-minute time frame, we have this candle, which is a 90 pip candle. This is much smaller, and then this one, which is 132 pips, and then we have this one, which is 132 pips. Ooh. 132, also 132. Let's go to the 15. 106. Let's take a look at the 5. 53. It's a perfect tap there. Push up. Yeah, I'm going to keep that on the 5. Keep that on the 5. It's so ugly here. So hard to find a liquidity candle here. Let's see. Let's look left. There's less noise left. 118 pips. $72. 542835. Mm, 05. No, we're gonna have to keep this on the 5 minute. It's too much noise on this, on the 15 minute. We'll just keep it to the 5 minute. That's the largest candle there. The 5 minute price has tapped it, makes sense. There is a liquidity candle here on the 15 minute. It's that one there, that candle there. That's why price is tapping it. But okay, let's do that. Keep it on the 50. 733. And this low is 670. It's a mess. I'll be honest, it's a mess. This range, 44-hour range, has just created such an ugly mess here. All right, let's look further down. There's nothing happening today. We're going to only do the analysis. There was news that came out, in fact, about 3 minutes ago. Nothing happened. Nothing happened, right? News came out. There you go. Look at that. It's good for the dollar. Employment change news came out. 104. They were expecting 77. Nothing happened. Nothing's going to happen. Even with the next news event, I don't think anything's going to happen. We're going to be stuck in this range until the interest rate decision. So we're going to do the analysis and then we'll probably hang around for another 20 minutes and then end the stream. I'm not going to be taking any trades today in the NY session. Nothing. I'm going to be waiting for the interest rate decision and the FOMC minutes, either to take two trades, one in the interest rate decision, one in FOMC minutes, or I'll look for one trade in either of those two. So, then if it's one trade, I'm going to be looking for that trade during the FOMC meeting minutes, or just before, 5 minutes before that. Okay. On the 1 hour, further down here, there's a candle there that's 122 pips. There is this, which is 110. Start with this. Let's go to 30-minute time frame. It's nothing really on the 30 minutes. There is this 70, but that's there as well. Let's go to the 15. Yeah, 30-minute time frame. Keep it to the 30, and this is the largest candle for both those zones. There's nothing bigger there. That's the next big one on the 15-minute. That candle right there, and then this 30-minute candle. This one, price came to that candle, and on the 30-minute, it came here, and then on the 30, it's 85. Yeah. I know what happened. I'm going to explain in a second what happened. Okay. On the 15-minute, when price dropped down and tapped that liquidity candle to the left, we pushed it down now because we don't want to overlap this. When price pushed down and when price created 30-minute support to go up, it created this liquidity candle where price came and tapped it again here, and then we pushed up, right? And then on the way up, we created this 30-minute candle, and then price tapped it 3 times, it's 2 times here, and then a third time yesterday in Y session, and then pushed up. So this is correct. So this is 519 and 652. 519, 652. Okay. And then below that is this 15-minute candle. This high 897, 183. And let's not overlap it. What's this low? 652. Okay. Right. Now that makes sense. 15-minute liquidity candle. Price tapped it, and it tapped it again here twice. Pushed up. Then we created on the way up. It created this 30-minute one. This 30-minute liquidity candle. We tapped it here in the London session yesterday. That was the Frankfurt Open, or just before the Frankfurt Open, and then again in the London session, and then pushed up, and then in the New York session as well, and pushed up straight to this. Now that makes sense. Okay, that's it. Okay, let's go to the 50-minute time frame. I'm taking time here today because we're not in a rush because we're not looking to take any trades right now in the first couple of hours of the NY session. So let's look at the 50-minute time frame and see what price is done in the Asian and London sessions. Okay. Yeah, that's the market open right here. So the market opened at 3326.8 or 3326.75, if you want a quarter number. Okay, I opened here. What is this? We just stayed in the Asian range. Don't even need to kind of draw the London range because that's the Asian range. That's where the market opened, pushed up, created a high, pushed down, created a low, and price just stayed inside that. And that's around 100 pip range. If you leave off the highs, if you just ignore the highs and the lows, then the range is around, where is resistance? Yeah, around there to about there. It's about a 70 pip range, 70, 74 pip range. Nothing. Okay. Anyway, let's draw the London high as well. Yeah. That's news. This is news. There's news in 5 minutes. So, but I don't care if price drops 100 pips, 200 pips, 300 pips. I don't care. Today, it's all about the interest rate decision and FOMC meeting minutes. That's the focus. That's what I'm going to be looking to trade later on today. Okay. So 183. 314. $360. Okay. All right. Let's take a deeper dive into what price did in the. This is news in a few minutes. See what happens at 30-minute time frame. Yeah, we're creating resistance under it. We've rejected the London Asian high and the London high, and we're trying to push down. Yeah, so we could push down to the London low, which is about 40 pips away, or push down to the Asian low, or come down deeper into this liquidity candle, right? Either way, we're still inside demand. So that there are no, you cannot, I don't sell inside demand. I, that's how I trade. So either way, even if price is going to push here, here, or further down to this liquidity candle, this is one liquidity candle, this is the next one. If you're going to push down here, I'm not going to take any sells inside here, right? Anyway, so let's take a closer look at what price did, right? We just ranged basically, but we'll have a better understanding once we take a look at the lower time frames. 1 second, 30-minute. Yeah, we could push up also. We create a 30-minute support. We could push up, but if you push up, we've got 20 pips, 28 pips away is this, and then supply is 40, 50 pips away. It's not worth it. It's not worth it trying to take a buy or a sell. Let price break out of these ranges. That might happen in a couple of hours, 2, 3 hours. Wait for that. Okay, going back to what I was saying, on the 15-minute time frame, the market opened here, right? We were ranging. We pushed up yesterday. We pushed down. We took a sell trade here. Then we pushed back up. Then we came back down. We just ranged. It was really ugly, right? And then the market opened here. We're still in the range. We are inside the liquidity candle. Keep that in mind. We're inside the liquidity candle. So price pushed up because we opened inside the liquidity candle. We pushed up, and we pushed up to 3332, rejected, created 30-minute resistance right there. There you go. And push down back into the liquidity candle, right? Tap the liquidity candle again, pushed back up to 3332, create a 30-minute resistance again, and drop down again back into the liquidity candle, right? So when it dropped the first time, it created the Asian high. When it dropped and pushed up again, it created the Asian low. Asian low. And then it pushed up, came down, pushed back up, created 30-minute support. Then it created the London low and pushed out of the liquidity candle and went back to 3332, right? So that's an important level that's seems to be keeping price down. Now, what I want to do, and then after that we went created the London high under the Asian high and came back to the liquidity candle. That's all that's happened, right? We just stayed inside the Asian range. Now, more important than any of that is why is price staying below this, right? So let's go take a, just give me a second. 332504, 332504. Okay, we're staying above it, right? We're staying above it. Um, yeah, so that's the previous weekly low. We're trying to stay above it. Now, keep this in mind. During news, and when I say this is the uh, employment change. What news event is this? This is the advanced GDP. There's nothing. Nothing's going to happen. Now, when I say during news, I'm referring to uh, sorry. Okay. If during news, during the interest rate decision or the FOMC meeting minutes, if price stays below 3325, we have a 30-minute candle close below 3325.04, then we are very likely going to retest and come straight down. Or if there's a lot of selling volume because price is accumulating volume, the accumulation stage right now, price is accumulating volume, we could, if a 30-minute candle closes below 332504, we could drop straight through, right? These are all liquidity candles. All of these, one, two, three, are stacked up one against the other. Even this one, four. We could drop through to all four of them, past 3,300, and then the next we could be coming all the way down here, right? This is the drop, 3289, heading to 3289. Let's look at that on the, yeah, 3289, and then further down. After we clear 3289, maybe tomorrow we could be heading down to 3265, right? That's about a 600 pip drop. That is if price closes and stays below 3325.04. And the reason for that level, because that's the previous weekly low, right? So keep that in mind. I've drawn the chart here. I'm going to keep that level here. Um, that's the analysis. Take a screenshot of this if you need to. Draw the zones. If you are trading later on, it'll be useful. If not, then it doesn't matter. Um, I'll be back in a couple of minutes, and then I think we will end the stream in about 3-4 minutes because I'm not looking to take any trades right now. Yeah. Um, So we're coming back, we're coming down. Let's see, the 30-minute candle is, did we close below? No, we're staying above. We created the 30-minute support, stayed above. This candle tapped liquidity, went up. This one broke the high. This one came deeper. Um, yeah, nothing really happening. We rejected the London high, right? We rejected the London high and we came to the London low and tapped it. Now we're trying to push back up. Yeah. This is it's really not advisable to try to take any trades right now. Just wait for the big event if you want to trade. Yeah, so just by looking at this chart, even without any supply demand zones or liquidity candles, just by looking at the chart here, there are highs being created here, and there is definitely liquidity above this. And obviously that liquidity is the liquidity candle, right? So there is definitely liquidity above these highs. You can see price is creating a kind of a barrier here at 3332, and above that is liquidity. So if price is going to push down during high volume, we can just tap it, grab liquidity, and then head down. And below also there is liquidity below it, but This liquidity is more obvious than what we see here. There is liquidity here for sure under this here. It's just like a wall being formed there. There's liquidity under that, and there's liquidity above that. That's a 250 pip range. All right, we have about 23 minutes for this candle to close. I'll be back in a few minutes. Yeah, so what happened is this. Priced this candle, this is before pre-NY London session candle, something very similar to what price did yesterday. This candle tapped 3332, we created resistance here. This one tapped it and tapped the liquidity candle. This one broke the low, right? This candle tapped the liquidity candle. That's what's important. We tapped the liquidity candle first. That's the most important thing. We rejected the Asian high, and also we tapped 3332 weekly SR level and closed below the liquidity candle, the Asian high, and the London high, and below 3332. And this candle broke that. So if you're drawing the fib, that's how you draw it. Yeah, and you can see how price tapped the optimal entry and it's coming down. It came here, 58 pips. We should be coming down to maybe 33.22. Let's see. But it's not worth it. It's not worth it trying to take these trades, at least not for me. I'm going to wait for later on today, but that's the reason why price came tapped here and pushed down. Okay, I'll be back in a few minutes. Okay, so yeah, we came tapped this 2 hour level, and now we're rejecting, trying to push back up. We came to the London low, we rejected the London high, as I said, came to the London low, and we're trying to push back up again now, right? So there's nothing happening. There's nothing that's going to happen in during the next few hours. We're waiting for news. Keep in mind what I've said. Um, these are the zones that are drawn. There is liquidity above this, right? There is liquidity above this, which is a liquidity candle. And then there is liquidity, there's liquidity below here if price is to go up. But liquidity above is a lot more clearer, a lot more clearer. 34, 1, 7, 9, 3. Yeah, there is liquidity above. Let's see. Let's draw some support resistance levels, and then we'll end the stream. You guys can use that if you need to trade later. — 3308, yeah, perfect. 3317, yeah, 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 yeah. 3316 is better. Three 350. '23. Perfect. Right. That's the SR levels. Those are the SR levels. Yeah. Those are the levels. Then those are the SR levels. Okay. Then above that, there is yeah, that's it. Those are levels. That's one above from here, and then these are the levels below. We're coming down right now. Coming down, we did tap that level. See, perfectly tap the resistance, optimal entry, and push down. Yeah, but I was not looking to take a trade today. Not at least right now. Later on. So this is a lot of compression. I said this right at the beginning when the stream started in the first 10 minutes, within the first 7 minutes. So a lot of compression means price is going to come down. All that compression means is price has tapped liquidity many times on the way up. We keep tapping it. Tap this once, twice, 3 times, 4 times, and again we created one more liquidity candle here. We've tapped that 1, 2, 3, 4 times. Then we create another liquidity candle here. We've tapped that once, twice, 3 times, 4 times, 5 times. So pushing through, right? That's all it means. So when you have compression, when you have liquidity candles stacked up one against the other, and price taps it 3, 4 times on the way up, that looks exactly like this. That's how you identify compression, right? And price is coming down now. We rejected this resistance. We closed below this on the 50-minute time frame. If you go to the 50-minute time frame, we tapped into that, right? We did this yesterday also on the stream. If you tap into one, then you're very likely coming to the next one, pull back, and we're coming into this. If you tap into this and do something similar, if you break below it, then we're very likely going to go to the next one. All right, so that's the end of the stream. I hope this was helpful. If it is, if it was, share the stream, like it, subscribe to the channel, and it helps to get the word across. And I'll be back tomorrow 7:30 a.m. EST. We'll come back and see if how these tomorrow when we come back, we're going to take a look at these zones and see how these zones played out. Right, I'm going to save this template. So we'll load it tomorrow. We'll load the template tomorrow. We'll load the template tomorrow at the beginning of this tomorrow stream and see how these zones played out. What happened, right? How price reacted to these zones and which direction did price push up or down? Did it push up during the interest rate decision and then push down? Or did it push down during the interest rate decision or before that and then try to push back up? Right? We're going to come tomorrow. We're going to have a look at that. Now, price is clearing the way. It's clearing the path. It's clearing the compression, right? So we'll have to see. Are we going to continue down? Are we going to have a pullback later on? Is there going to be a pullback? Maybe a pullback will start about 30 minutes, 40 minutes, about an hour from now. We'll start seeing price pullback, come back to these levels, and then are we going to head down? We'll have to wait and see. Okay. All right. All right. See you guys tomorrow, 7:30 a.m. EST. Take care. Don't overtrade. Don't over risk. Be careful. It's the interest rate decision. If you are trading the event, then use correct lot sizing and do your own analysis. And if these levels are helpful, then watch price when it gets there. Depending on your style of trading. If you are a session trader, then you can look for the 30-minute time frame confirmations or 15-minute time frame confirmations. And if you are a high time frame trader on the 1 hour or the 4 hour, then you can look at those candles. All right. All right. See you guys tomorrow. Take care.